Good morning. Welcome to Synergetic Technical Analysis. I'm always very glad to have a chance like this to meet with my fellow traders and to share some of my ideas about technical analysis and trading. Over the past few years, I've worked with hundreds of traders all around the world, and it's been a great experience. I've found that the good traders are, without exception, interesting, independent, self-disciplined, highly motivated, imaginative, and even creative, even courageous, rather, individuals. I have a theory that traders get this way because suffering builds character, and it's certainly not an easy business in which we have somehow found ourselves. Trading really is a test not only of our intellects, but also of our character. I think that if you've traded for any length of time at all, you had to learn some very hard lessons, and you had to learn them very fast in order to even survive long enough to learn to trade profitably. For example, you had to learn how to control your fear and to control your greed. It's not easy to survive in this business, and as you know, most traders don't survive for very long. I've had the good fortune of surviving for over 30 years now in the futures business, and before you begin calculating how ancient I must be, I should tell you that I had the very good fortune of getting started in the business back in 1963 when I was just 13 years old. My dad had a seat on the old Chicago Open Board of Trade, which is now the Mid-America Commodity Exchange, and he used to pay me $10 a week to keep his daily and weekly bar charts, moving averages, and point and figure charts on agricultural commodities. I spent my summer vacations in a manner slightly different from most teenagers in suburban Chicagoland, and I worked on the floor of the Mid-America Exchange, keeping 15-minute charts on corn, wheat, and soybeans, and calculating moving averages, while my dad traded those commodities in the pits. And every 15 minutes or so, he'd come out of the pits, and I would say something like, corn is up, wheat down, beans up, referring to the 15-minute trend. And he would return to the pits and scalp those markets, just as most of the other traders were doing, but he'd only take the trades in the direction of the 15-minute trend, which put him one step ahead of many of the other traders, and we usually did pretty well in those days. I made the first trade for my own account in 1970 on my 21st birthday, the first day I legally could open an account and trade, and I've been trading for a living since then. I trade from an office at my home in Wheaton, Illinois, and I'm here this morning to show you exactly how I do it. Part one is called How to Increase Your Trading Profits with Synergy, and let's take a quick run through the outline so we're clear on what we'll try to cover in our first 90 minutes together. First, I'll talk about the inconsistent duration and magnitude of moves. Second, interpreting counter-trend moves correctly at critical points within every trend. Third, trend-following indicators and oscillators, two ways to analyze price movement. Fourth, momentum divergences, the most powerful oscillator signals. Fifth, the idea of synergy. Your total trading method can be greater than the sum of its individual parts. And sixth, the last part in the first section, how to synergize oscillator signals with trend lines, moving averages, and Japanese candlesticks. Let's get started. On chart one, it's a daily bar chart of the S&P contract. It could be any commodity. I certainly didn't have to look very far to find a market that looked like it would be difficult to predict, to forecast, to trade. Any market would serve that function just fine. On this daily bar chart, I have two moving averages, a 9-period moving average of highs and a 9-period moving average of lows to create a moving average channel running across the chart. I'm defining an up move as being from the lowest low that prices make below the channel to the highest high above the channel. And I'm defining a down move as being from the highest high above the channel to the lowest low below the channel. And I show you those moves by these dark black lines. You can see that the moves seem almost random, inconsistent, perhaps unpredictable. The big moves and little moves seem to begin and end similarly,